All right, let's get into it. Today, we're looking at a fascinating story where domestic politics, some really aggressive foreign policy, and some very strange market moves are all crashing into each other. We're going to connect the dots between political heat in Washington, military moves in South America, and the kind of market volatility that's got everyone scratching their head. So here's the game plan. First, we'll look at this weird split we're seeing in the markets. Then we'll dive into the political firestorm brewing around crypto. After that, we'll shift to the rising tensions with Venezuela. We'll see how all of this actually affects prices, and then we'll zoom out to get the big economic picture that's hanging over everything.
Okay, so this whole thing kicks off with a real head-scratcher. After the latest U.S. economic data dropped, traditional stocks and crypto, which usually kind of move in the same direction, they just split. They went completely separate ways. And that kind of split tells you there's more going on here than just the numbers. And you can see that split right here. I mean, look at the S&P 500. It was a sea of red. Our source material points out that if it wasn't for a few huge AI stocks propping things up, it would have looked even worse. But then you look at crypto, and it was holding strong, totally in the green. So, what's the invisible hand pushing these markets in opposite directions? Well, that invisible hand, according to the source material, starts right in Washington, D.C., with a really intense political fight that's heating up. And the crypto industry is sitting right in the middle of the crosshairs. Yeah, this quote from Senator Warren wasn't just some off-the-cuff remark. According to our source, this was basically the opening shot in what they call a crusade against the entire digital asset space. It was a clear signal that a major policy battle was on the horizon. And the source frames this fight in really stark political terms. On one side, you have what's described as the anti-crypto army, a small group of academics and lawyers. And on the other, you have the crypto army, pegged at 60 million angry voters. That's a huge potential voting bloc, and you can bet that kind of dynamic gets a lot of attention, especially in an election year.
Now, to add another wrinkle to this, the source brings up electricity costs. Take a look at this. The Consumer Price Index for electricity has shot up during the current administration. And, as you know, higher power bills are a really sensitive political issue for pretty much every household.
And this is where it gets really interesting. The source says that after going hard after crypto's energy consumption, Senator Warren is now pivoting. The new target? AI data centers. Letters are going out to the biggest tech companies, asking if their operations are the reason people's power bills are going up. So the political pressure is still there, it's just found a new focus.
Okay, let's switch gears from domestic politics to the world stage. Because while all of that was going on, the source material also highlights a pretty dramatic increase in tensions between the United States and Venezuela.
Now that is a powerful quote, cited directly in the source. I mean, this isn't your typical diplomatic language. We're talking about an armada. That's the language of a military showdown, and it's a huge escalation in rhetoric that the markets absolutely cannot ignore. And that aggressive talk is being backed up by a crystal clear set of demands. The source lays them out, and they're basically ultimatums: a terrorist designation for the regime, the return of seized assets, and a demand to stop funding alleged criminal activity. These are not small requests. So let's recap. We've got a political war on crypto at home and the rumblings of a military conflict abroad. So what did this actually do to prices? Let's break down how the markets reacted to all this news.
First up, oil. The source makes a key point here. Right before all this geopolitical drama flared up, the price of West Texas crude oil had dropped to $55 a barrel. That was a multi-year low. The stage was perfectly set for a big, sudden reversal.
And crypto? Well, that strength that was showing earlier completely evaporated. The 1-2 punch of political and geopolitical risk sent Bitcoin tumbling by about $1,000, wiping out all of its gains for the day.
And this is important. It wasn't just smaller investors getting spooked. We saw serious institutional money heading for the exits. The source reports a $277 million net outflow from crypto ETFs. That's the second straight day of heavy selling from the big players, and that always sends a powerful signal.
But if you dig into the numbers, the source reveals a really fascinating detail. It wasn't a market-wide panic. The huge majority of that selling came from just one firm, BlackRock. At the same time, others, like Fidelity, actually saw small inflows. This tells us the selling was really concentrated, not a total loss of faith across the board. Now, to really get why the markets reacted the way they did, we have to put all this political drama in context with the broader economy, and the latest data gives us that final piece of the puzzle. And honestly, the picture that data paints is pretty murky. As you can see, retail sales were weak, unemployment ticked up, wage growth slowed down, and those PMI indices were in negative territory. All of these are signals that the economy is starting to cool off.
And we know this because Citigroup's macroeconomic surprise index, which the source points to, basically fell off a cliff. All that means is that the economic reports weren't just a little weak, they were way worse than what all the experts were predicting.
So all this weak data led to a really divided stock market. You can see here that tech and consumer stocks actually managed to eke out a small gain, probably because traders are now hoping for interest rate cuts. But the more defensive sectors like energy and healthcare, the ones more sensitive to a slow economy, they took the biggest hits.
So what's the big takeaway from all this data? It's that traders are now betting more heavily that all this economic weakness is going to force the Federal Reserve's hand. They think the Fed will have to cut interest rates sooner than expected. The chance of a March cut is going up, which helps explain why some of those tech stocks managed to hang on. And this is really where the source material leaves us. From a senator's campaign in Washington to an armada in the Caribbean Sea, these political moves are sending huge ripples through everyone's financial portfolios. It really makes you ask, in a world this connected, can any market ever truly be separate from politics?
If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel in the first comment. See you next time.